Looking for recession-proof stocks? Find the Outperformers. I think there are stocks that tend to do better in a recession and certain sectors that tend to do better, says Robert M. Wyrick Jr., Managing Member and Chief Investment Officer of Post Oak Private Wealth Advisors in Houston, Texas. But I don't know if I would call any of them recession-proof. A better strategy for buying stocks may be to examine the characteristics of stocks that tend to perform better than others during a recession. The stock market comprises 11 sectors, each made up of businesses that operate in similar industries. Xerox, Apple, and Microsoft, for example, are all in the technology sector, while Boeing, General Electric, and Caterpillar are all in the industrial sector. In 2022, many of the best-performing stocks have been in the energy sector, such as Occidental Petroleum, Valero Energy, and Chevron. During typical recessions, consumers tend to pull back spending on discretionary or luxury purchases. Think food, beverages, household and personal products, tobacco, and similar items. The companies that supply these products are in the consumer staples sector. Healthcare stock services and products they offer are always in demand. This sector includes companies in the biotech, pharmaceutical, and healthcare equipment industries, as well as healthcare providers and services. Demand for utilities services can generally be expected to hold even during recessions. These stocks include companies that ensure delivery of electricity, water, and gas, as well as independent power and renewable electricity providers. There are certain companies in any sector that make sense to invest in now, Wyrick says. You just have to do your research. Look at their earnings. Growth is great, but companies that produce a consistent revenue stream can be even better in a volatile market, he says. Having some exposure to technology still makes sense, but not to the degree of 2020. Investors should be selective and focus on companies with consistent earnings. Creating a diversified portfolio. A well-diversified portfolio is one of the best ways to ensure you're prepared for whatever turns the market takes, financial advisors say. That means including some of the sectors mentioned above, but it also means making sure your portfolio is broadly diversified across industries. The sectors that tend to outperform during a recession, such as consumer staples and healthcare, may not see the rate of growth other sectors, such as financials and energy, could experience during the recovery phase.